Good evening, everybody. Good evening, good evening. Let's talk about it. Let's talk about it. Hey, you here to learn to share? What are you looking at? What's up, Kim? What's going on, FC? Here to learn to share. FC, I posted something in the super secret ICT Discord. Please go and respond. Please go and respond. What's up, Trader Mo? What's up, Will? What's up, Dave? What's up, Free to Be Me 711? Hold on. That's my first time seeing that name. If it's not your first time being here, I truly jalapize. But thank you for pulling up Free to Be Me 70. Hold up. Is that Josh? Is that Joshua and his wife? Nah, that ain't. I can't tell on the picture. I can't tell on the picture. That show look like that kind of favorite. I can't tell in that picture too look. I can't tell. I thought that was him. I thought that was What's up, man? Trying to slide in incognito. What's going on, Hines? What's up, Lil Hawk? What's going on, Cameron? Yo, you on her page. What's up? Hey, SD. Get that heart off of them, man. Type that again. Say what happened, or hey man, or what. Get that heart off of them, man. Come here. Come over here. Coochie coochie coo. Coochie coochie coo. Coochie coochie coo. What's up, Robinson? Yeah, man. Hey, I came back here. I was getting ready to update my charts, and something was laid in my spirit from on high. And I was like, you know what? Who is Mike? Like Mike. If I can be like Mike, who is Mike? What's up, SD? I was coming back here to update my charts, and I just said, hey, you know what? When I be, talking to the gang, sometimes people be, letting me know stuff like some of their struggles, some of their hurdles, and it usually all boil down to the same general problem. And it's the same thing I had issues with when I first started trying to trade ICT concepts, right? So let me share my my screen. First, let me open up a picture so I could talk about I can show what we're gonna talk about. Hey, look here, man. I've studied. I mean, I have my model, but I'm not profitable, man. I keep getting stopped out. And the more I get stopped out, I become afraid. And then when the trade start going in my direction, I get scared to hold it to my profit target because I keep getting stopped out and I don't want it to reverse on me. And I just don't know what to do. I feel you. I feel you. I was the same way. When I used to get into trades, for those of you who've been around for a while, y'all know I suffer with anxiety. I take medicine for it, right? My feet would literally tingle every time I got into a trade. my feet would be like, because I would be so anxious. I would be sitting here thinking I'm cool as a cucumber, but as soon as I got into that trade, my feet would start going. My body was reacting. I was so anxious about that trade, and it all boiled down to this. And it's the same issue that a lot of the gang have, right? What is that? Hey, looky, who got the cookie? Let's go up here to the 1 hour real quick. I got distracted. I'm sorry. Isn't she lovely? We got to that 1 hour fair value gap. We got to it. Now, let price let us know if it wants to reject off this fair value gap and go after those lows into this fair value gap like we discussed. Well, I'm saying we discussed. Everybody wasn't on that live. But this is what we talked about. And for those who may feel like, nah, you're just singing that now. Go back to the video that we did today. Screenshot this. And then look at the one from the day, and you'll see this line is in the exact same spot. Those words are in the exact same spot. Nothing moved. All I did was just close it and open it. I mean, hide it and show it. That's all I did. Go back and look at today's video. This morning's video was tape reading with Timmy. The Monday morning tape reading video. Lines in the same place. Didn't move it. Put the line there, right there. That's the candle right there that was created when we put the line there. Price was right there. My idea of ideal price movement. That's what it says. Now we're at the fair value gap. Took out the buy side. We're at the gap. Now, what would make this? Okay, since we're talking about it, let's just talk about it. What will I be looking for to take a short off of? I will be looking for a break in this low right here, right? And once we get to a break in this low right here, I will be looking for an opportunity, and I need some authority. I need some displacement. I need some big candles. See how this candle shot up like that? I need some big candles down. Break this low right here, and then I will be looking for a fair value gap, preferably somewhere right here, because this right here would become a bearish breaker, right? This right here would become a bearish breaker, right? Because we came down, made a low right there, went up, took out more buy side, because we took out the buy side, then we came down, then we took out the buy side. And if we break down, that will become a breaker, and I will be looking for a fair value gap right around here with this breaker. That would be an ideal place to short. An ideal place to short coming off of that. Why would that be an ideal place to short coming off of that? Because it will be above the new week open. It will be above the weekly open. This is the weekly open. It would be up here above the weekly open after taking out buy side liquidity and rejecting off. And then I'll be targeting this low down here. All right, it will be above the weekly open using the power of 3 concept. Right? If price wants to come back down to this fair value gap and continue up, I really don't care. I would just look for a reason to keep buying. But I would love to see it come back down. And why is that? I'm not going to tell you. I'm going to move on to what we were talking about in the beginning. So you've studied, you got your model, but you're not profitable. You keep getting stopped out. You can't figure out what you're doing wrong. Let's talk about it. Let's talk about it. Get out of here, Ray. Turn off the new week. Opening gaps. Let's talk about it. Let's talk about it. Okay. Problemo number one. Right? Problemo number one. If you keep getting stopped out and you don't really know why, right? And then when you enter the trade and it start moving in your direction and you get scared and you want to close it because you keep getting stopped out and you don't know why. Problem number uno. Problem. The minister at the church that my mama went to when she was in Florida. He say problem. He still said problem. He don't say problem. He said problem. The problem. The problem. What? Well, if you don't talk with a regular Fort Lauderdale slang, problem. Who you supposed to be? Problem. Number one. Right? You do not understand the draw on liquidity. That's problem number one. Problem number one. You do not understand the draw on liquidity. Right? You may have a relationship with it. You may have a relationship with it, but you do not truly understand the draw on liquidity. Right? Problem number two. Right? And it ain't gonna be like all of them for everybody. It's just, stuff that, what I'm saying, it's all in the general area. So if one of these hits you, just go. Who know what that was? Somebody tell me what that was right there. If one of these hits you, Rocky, that's just for you, Rocky. Somebody put in the chat what that was. If one of these I hit you, put in the chat. Number two. Okay, you don't understand the draw on liquidity. You don't understand the importance of time. I'll just say algo times, aka kill zones. Right? Problem number two. You don't understand the importance of algo times, aka the kill zones. Problem number three. Let me see. These are the big ones, right? And if you this right here, this is the one for everybody. If you don't have problem 1 and 2, right, and you're still not profitable, this one right here is for you too. This one covers everybody. You don't have a strict risk management plan. I have a strict risk management plan. You're adjusting your stop. I know it's going to turn around for me. Yes, a hit dog will holler. Hit dog will holler. What's up, Aloysius' mom? What's up, Aloysius' mom? What's up, Trey? What's happening? Now, this one it says, I have my model, you know what I'm saying, but I'm not profitable. And last on the list, this is for the lazy people. You have not truly, did I spell that right? Vet your model. Right? You just saw Michael or your favorite ICT trader or somebody on Al Gore's internet. You just saw something and you said, hey, that looked like it's cool. I'm going to use that. Right? So these are the problems. Now, let's go over here to price. Right? Let's go over here to price and see if we can do something about it. Let's give them something to talk about. Talk about. Hey, let me share something with y'all real quick. I got an email today. Right? I got an email today at 5:08 p.m. Right? And it came from a little fuzzy red bear. Right? I said, man, I ain't been subscribed to this mailing list in forever. Why am I getting it? Like, so I look at the email and I'm like, this can't be real. Right? So it's from the Kajabi or whatever it was when I, when I had signed up for that little trash little sniper series thing, right? Same place. And I'm like, did they like buy my information from somebody else? Because it says, hi, hey, name. My name not even on there. And when you have like if the people legitimately have your information, because I have these things, I used to have these things on my emailing list, and when my emails used to go out, that name gets replaced by something that's in my official database that I'm supposed to have, right? So it would say, hey, Tim, hey, Rogers, hey, sometimes it's just your email, but it never should say, hey, name. So I'm like, okay, I thought I wasn't on their mailing list anymore. Maybe they just emailed me anyway, even though I'm not on their mailing list. So I said, hey, let's go see how much people are getting taken for these days. No shade against anybody that want to charge for their time. But when I saw this, 500 a month. 500 a month to get the 4 best stocks to hold long term, the 3 best prices to buy our list of stocks from using someone's crystal ball delivered every month, the 5 best growth stocks to invest in, the list of stocks to stay away from, 3 lessons taught on every call. The price exactly where to get in and where to get out. Our two favorite apps for investing. Invites to two. It's invites to the events. You don't get there. You just get invited. Invites to interviews. You just get invited. You get invited. You got to pay your own way. Ah! Get off my screen. Oh. Do you see 10 minutes on Wednesday? What? What, Cameron? What are you talking about 10 minutes on Wednesday? What? Now, what was I saying? Okay, you don't understand draw. Right? Let's talk about it, right? We getting serious again. Hey, Rocky. That was for you, Rocky. That was for you. Now, let's get serious for a minute. Draw. Right? The easiest way I found to look at draw is simply by the closure of the candle after it takes out a high or low. Also, the way price reacts to off of a discount or a premium PDub rate. Those are the easiest ways that I've learned how to form a bias, right? Form a bias and form the draw on liquidity, right? Let's go to the weekly candles, right? It can be any time frame you want, but let's go to the weekly candles. These are weekly candles, right? Weekly candles. Let's give them something to demonetize. Oh, something that they offered on there. Oh, I don't know. So, all right. Y'all remember? Let me turn my fancy dancy on for y'all. Fancy dancy, fancy dancing with my dot. See how my dot changed when I click the button? Do the dot, do the dot. Do the dot, do the dot. Do the dot, do the dot. Now, if y'all remember, last week I said my bias was bearish on the weekly, right? And what made me say that, and we're talking about this week right here, right? Guess what I found out today? This is nothing spectacular. And y'all probably gonna laugh at me when I say this, but I do not care. I found out today, right? That I found out how to do the replay stuff. I can click this little button and then go in. Remember when I be like, let's pretend like we can't see these candles, right? I can click this and get rid of the freaking candles. And I can let price go and I can buy and sell and actually make trades. I'm like, I never knew I can do that on here. I know y'all probably thinking, Tim, who cares? But I was excited about that. I was excited about that. Now, so last week before that weekly candle came out, right? I said that I was bearish on the week, right? Now, I know you're probably looking at this big down red candle. I've been asking you for months on here why you don't use it. Get off my life. I know you're probably looking at this big red candle and you like, Tim, That's a freaking big engulfing candle. Anybody know that? Forget all that. This is, I use it for any type of candle, right? And this is what I look at, right? Now, let's zoom in upon further inspection. Hey, where's my words? Want my words to stay in the screen. So let's zoom in for further inspection, right? So price came down this week and it took out the prior week's low, right? It took out the prior week's low, right? Come here, Snap. It took out the prior week's low and it closed below. Hey, come here. It closed below that low. So what is that? Hey, I can't type inside that. That's no good. Me need one I can type inside. I know they got an arrow on here. Right there. Get out of that path. Displacement. That's what we call that. We call that closure below that low displacement. So when price, right now, mind you, right? Before that, right? Before that here, right here, price on this week here, like this is for this week, but for this week here also, I was bearish on this week too. So I'm just going to explain two birds with one stone, right? Price on that week, wrong one. Price on that week, right one. God dog it, Tim. Okay, so price on this week took out buy side, right? And then it closed. You didn't get the notification, E-Rock? You got notifications turned on with the bell click? When you click on the notifications, like the subscription thing, you got to click on it, click on the bell and open it up. And then it's got to say like all. It's got to say all for them to send you the notifications. Let me see if I can find somebody I'm subscribed to. Right here. See, like on Country Wayne, if I click on this right here, you got to click on the bell and you got to make sure you click that one that says all. Because when it come on, I think it might be on personalized or none. I don't know which one. I think it's on personalized. But you got to make sure you click on that one that says all for them to send you the notifications. And then the notifications, it's either gonna go to the YouTube app on your phone or the email that's connected to your account. I get it on my YouTube app on the phone, and I get it to the email that's connected to my YouTube account. You ain't missing nothing. I'm just some dude for a lot of that floor that be running his mouth, man. You ain't missing a thing. Now, this week, right? This week here, I was bearish also on the week, right? Because, and you looking like, Tim, this candle went crazy to the upside. Now, why would you be bearish there? Let's talk about it, right? We took out the high and we did not get displacement above it. We actually got rejection. We actually got no displacement, rejection. Y'all get it? Y'all get it? Y'all understand? Y'all get it? Y'all understand? Y'all know what I'm saying, right? So when you hit a high, and this is for any time frame, right? This is for any time frame, right? And this can go for candle to candle, but we more so want to focus on the extent of the price leg, the move, right? We want to focus on like higher time frame points of expected reversals. You know what I'm saying? We want to focus on stuff like that, right? We want to focus on stuff like that. Right there. Y'all see that right there? What I just highlighted right there? Right? Y'all see that right there? What I just highlighted? Y'all know what that is? That right there is the high of a higher time frame PD array where we're expecting something to happen. This is the higher time frame of a weekly PD. Well, Tim, what PD array it is? It don't matter what PD array it is. It's just a higher time frame PD array that we're expecting price to react off of, right? So when we come to that PD array that we're expecting price to react off of, right? We come up, we get there, we're waiting on price to tip its hand. Price goes up above the buy side of this week. It rejects, closes inside the buy side, and respects the weekly PD array that we were expecting price to react off of. So now that it has given us a hint that it's going to possibly reverse because it rejected and it closed inside. So now when it rejects off of a high, what's the draw? The low that sent us there, right? It works candle for candle, but it also works for the time frames. So this is a weekly candle. So for the week, I was bearish for the week. And if you're bearish for the week, where is the most beautiful place to get short at? Right? Above the weekly open the next week. Why? Power of three. Power of three. In your bearish, you want to see price open, go up, go down, and close at or near the low. So if you're bearish, the most opportune time to try to get short would be above the weekly open. That's the most opportune time. But Tim, what if I can't get short during the weekly open? I'm glad you asked that question, little Timmy Rogers, because the power of three works on all time frames. It works on candles, candle by candle. It works session by session. If you recall this morning, I said if the power of three for the New York session is going to play out. We just went below the midnight. That was the time, the best time to get long, because we just went below midnight. The power of three played out beautifully in the London. So the power of three played out bullishly in the London. And I said, if this bullishness is to continue and this power of three is to work, we just went below midnight. This is the best time to be trying to buy, right? Once we dropped lower, price was looking bearish on the 15-minute, the 5-minute, the hour, the 15-minute, 5-minute. So I was like, hey, I'm thinking we're going to get these lows, right? It didn't go, like I always say, you can have your draw, but it don't ever have to get there. Because guess what it did? It just came back down below midnight to give the New York session the opportunity to get long below midnight, and the power of three worked out for the rest of the day. So understanding the power of three can also help you in your, it ain't necessary, right? That's why I didn't put it up there. It's not necessary, but what's absolutely necessary is understanding the draw. And that's simply how I do it. That's simply how I do it. When I come to a high or low, if we reject off the high, my draw is the low that sent us there. If we reject off the low, my draw is the high that sent us there. For the daily, if we reject off of the daily high or daily low, my draw is the opposite end, right? And then I just wait for price to play out. I wait for price to play out. Is it going to really go up and come down, or go down and go up? Because when you have a draw, you want to see it move in the opposite direction first to give you an opportunity to get short in the premium or long in the discount, right? You always want to buy in a discount, sell in the premium. And you need to understand what dealing range that the algo is working in. Always understand where price is trying to get to, right? And once you understand where price is trying to get to, buy in the discount, sell in the premium. And don't just jump in chasing price. Buy in a discount where your risk management allows you to absorb any drawdown that you're going to take. Sell in the premium where your risk management allows you to absorb any drawdown that you may take in the trade. Everybody ain't getting zero drawdown trades. You're gonna get in trades where you do the whole pucker up a little bit. Trust me, you're gonna get in it. All right. Understand the kill zones. Let's give them something. Oh yeah, let's go. Let me cheat. And then wrong one. All right, that was that one. And then we went up, then we went down, right? So I wish I knew how to rewind. Right? So there you go again. We was bearish on this week, right? What did we say? Right? It went up. If you're bearish, you want price to go up. Why do you want price to go up? Because you want to sell in the premium, right? Came down, took out the low, continued down, closed below. Boom. Right? Power 3. Open, went above, came down, closed near the low. Bearish, open, go up, selling the premium. I think I said buying the premium last time. Selling the premium, come down, buy it back in a discount. All right. You didn't get your notification either? Okay, so now let's talk about the kill zizzles. Let's talk about the kill zone homes. Let's talk about the kill zones. Talk about the kill zones. Talk about talk about talk about the kill zones. Don't need none of that. Kill zones. God dog it too. Oh, get out of that playback. McDonald's. What happened? How did I get on McDonald's? What did I hit? All right. Kill zones. What? Hey, come here. Oh my God. What am I doing? Oh, I'm tripping. I keep thinking I'm on another program and I keep hitting the space bar and it's changing it. The space bar changes the okay. Now let's go to the hour chart. Let's go to the hour chart. Hey, what happened to that London? I done messed the London up. Okay. Now let me see if I can fix this London. How do these get all squeezed up like this? Man, how do you get all squeezed up like this? And all up. So, you know, it ain't like I don't try to put like a hard fast rule. I think ICT started at like 130 or something like that. You know what I'm saying? I don't try to put like no hard and fast rule on it. And then this right here, I got it around like 7, but I usually start watching it around 8 o'clock. And then this one he'll go to like 11. And then from wait a minute. It's going crazy. Man, oh, this got all messed up. I don't know what's going on with this right here. Yeah, that got all messed up. Should be. Okay, yeah. That got all messed up. I'm sorry, y'all. Sorry, y'all had to suffer through that. 2, 3. Okay, so now we got our So these are your ICT kill zones, right? There are time frames dealing with, the different times of day, algorithmic times of day, right? So during these kill zones is when the ICT concepts are the most probable. This is when they are the most probable. They're more likely to happen, be effective during these times. And just like anything else with ICT concepts, you want, that's what probably happened last time. You see, when I held shift and did that, how it squeezed that up, that's probably what happened last time. I probably was holding shift, because when you hold shift, the lines get straight, but the boxes act real wonky. And I probably was trying to move it and hold shift so it go straight up and down. And I probably had an edge. So, right, you got, oh, let me adjust this. So, time and price. This helps you with time. Uh-oh, what my words at? $239. Okay, 225. So put it at 245.04. Oh, you don't give me the coordination on this? You got to be freaking kidding me. You got to be kidding me. Oh my God, I'm getting so frustrated right now. Jesus be offense. Jesus be offense. Keep me near the cross. Keep me near the cross. There you go. All right. For those just as impatient as me, get off my live. You ain't paying $500 a month for this. Okay. Now, 4 hours later, that disorganized moment was for you, Rocky. It was just for you. So, this right here, where I say you don't understand the impact, you don't understand the importance of algo times, aka the kill zones. Now, in the kill zones is where you want to be looking for your reactions to PD arrays, right? You want to be looking for your reaction to PD arrays and the creation of PD arrays inside these kill zones. The kill zones work together throughout the 23-hour period, right? So from 12 a.m. from here, from 12 a.m. over to the close there, the kill zones work together. They work together with each other, right? Well, Tim, how do you know they work together with each other? Because they do. Now, let me show you here real quick and just one example, and we're going to leave on. This right here, this low was created in the London kill zone, right? That low was created in the London kill zone. In the New York kill zone, we attacked that low and then rejected off of it. And where did we happen to go? That high from the London kill zone. Did we have to get there? No. We could have gone to that high and then reversed. See that little boop, rejection right there? That little boop, that little rejection right there? That could have brought us back down, right? But the bias was still up here. That's why I told you it works candle to candle, but the bias of the move supersedes the candle to candle, right? The bias of the move supersedes the candle to candle, especially on the lower, like on the 15-minute. It's going to be real spotty from candle to candle. But it can work. It will work, but it's going to be real spotty. Why? Because the 15-minute time frame don't hold as much weight as a weekly, as a daily, even as an hourly, right? The candle to candle bias is going to get real spotty, right? But if that rejection lines up with a daily high that you're expecting it to reverse off of, or if it lines up with a weekly high that you're expecting it to reverse off of, then that 15-minute is not what's carrying the weight. It's just lining up with a higher time frame PDub rate. Bing, 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 bing. Your head should be ringing right now. So the kill zones work together, right? And you want to be watching for PD arrays that are created in these kill zones. You want to be looking for entries in these kill zones, right? Now, you have a lunchtime kill zone too. I don't trade lunch. So, you know, like for this lunchtime, for example, right here, right? What does ICT teach about lunch? Right? He teaches that lunch will more than likely attack the opposing liquidity to give you a continuation up. It came down, attacked the London close, and also what did it do? It got into this BISI. When was this BISI created? Inside the New York kill zone, right? Even touched this order block right here. The BISI was created inside the kill zone. It reacted off of it in the London close kill zone. It reacted off of it in the lunch time frame when it rated the lows, right? And then in the New York PM, it came back down to the order block again and respected. Look what the body respected now. Look what the body's respected now. The body's respected that same BISI that was created in the New York kill zone. This order block's job that was created in the New York kill zone, its job was to block price. And it did it very well. So the kill zones, they work in tandem with each other, but you always want to be looking for your PD arrays to form in the kill zones and to be reacting And it can react in the same kill zone, or it can react in another kill zone later on in the day. And what about this one where nothing happened? If it comes back on another day, expect that to have some kind of reaction. Some kind of reaction. What will the reaction be? It depends on what the bias is when it comes back to it that day. It may support price, and it may be used as an inversion fair value gap where we trade down to the bottom side and use it as resistance. So you probably don't understand the importance of the algo times. You always want to be looking for your PD arrays that are created in the kill zones. The London kill zone, if you want to know the exact times of the kill zones, ICT got them up there. I just kind of generalized mine from 1:30 to 5 for the London Open, from 7 to 11 for the New York Open, and from 11 to 12 for the London close, and then from 2 to 3 for the New York PM. And then I usually don't trade the last hour. He has another one for the last hour of trading, but I usually don't trade after 3 o'clock. Yeah, look what we got today. Remember when we talked, I said earlier today, I said, let's see if we get this. Set the low in London, and then in the London close, the opposite end, new high right there. Set a low in London, then we made a new high in the London close. Ha ha ha. Ha ha ha. It worked out again. Do you remember when we spoke of that? Now, the last one, well, the last two, and like I say, don't try to make it a hard and fast rule. If you try to make anything about trading a hard and fast rule outside of your risk management, you're going to start, because price action is going to change. You have to be nimble with price. So you have to, allow for variance. So it's like, just look for it within said range. That's why I just go from 1:30 to 5. The London don't open until 3. It opened at 3. You know what I'm saying? So you're getting from 3 to 5 after it. So you're getting like 2 hours after it opened, but you're just looking for price to start reacting and doing stuff. You know what I'm saying? And it's just a window. Don't try to like make it hard and fast. Like, oh, it's got to be it's just a window of time. This is when, and then like this right here is just he called this the London close because it's just the last hour of the London session, right? In actuality, this is all part of the New York kill zone. You know what I'm saying? But it's just a special thing about the London close, because the London is closing up, and just like a lot of times when we're closing up, we get a reaction at the end of the day. A lot of time when we're closing up, so it's like the London is closing up, they're settling, because at the end of our day, they have to settle stuff. And so when they have to settle stuff, it's going to, either inject or suck out liquidity out of the market. So it's like the algo is going to react. So that's, I'm just assuming that's why he specified this last hour as the London close. And I think this London close is really leans heavily toward the Forex side, because the Forex, it's like super like inversely correlated with the dollar. So I think it's kind of just like this 730 thing for the New York Open. That's more geared toward the Forex. Like for the indexes, it's more geared toward like 830, like when the news embargo come out. You know what I'm saying? But I still just, watch price from that time. So I still look for it. Like I'll take a trade at like 7. I took a trade at like 7 o'clock the other day. when we was getting ready to go into PPI. You know what I'm saying? But for the risk management, can't help you with that. And you have truly not vetted your model, I can't help you with that. You have to do the work. You got to go back and do the work. You got to go back and do the work. Do the work. Question for somebody. Oh, wait a minute. Hey, Tim, this E-Rock. I know I sound like little Timmy Rogers, but I just wanted to know, is there a particular reason you don't trade after 3? Is it due to your schedule or the volatility? Nah, I just don't trade after 3. A lot of times after 3, it'd be like kind of blah. And a lot of times after 3, it'd be exciting. But it's more so stems from trading my own personal account inside Ninja Trader. And if you don't have enough capital in there to carry a ES contract overnight or MES contract over the whole, then they'll margin call you at, I think it's like, it's either 330 or 340. It's like it's before 4. It's before 4, and they'll margin call you. And I think it costs like, they charge you like $50, I think, if they margin call you. So that's one of the reasons why I was like, okay, because I don't want to get into something and it take all the way up until the end to play out, and then they mess around and margin call me. Because I got margin called before, and I ain't realized. I'm like, why did I get margin called? And then I went and I looked, and it was because like when I was sim trading, I was holding positions overnight. That's because in the sim trade account, you know what I'm saying, it was set to like $100,000, $200,000. You know what I'm saying? So I'm sitting up there holding. I got my thing. I'm trying to hold it overnight, and then I get an email saying I got margin called. I'm like, what? So I looked at it. It's a good thing that I was profitable in the position. And then I went and started studying it, and it was like, hey, you can't hold it over, sir. And because it was before 4 when it happened. So that's pretty much the reason why for me. Hey, Tim, your ad is suitable. Your video is suitable. I promise y'all, I'm constantly having to, you see this here? Great news. After manually reviewing your video, we've determined that it is suitable for all advertisement. Take reading with Timmy on 8/11/23. I'm telling you about these folk for some reason, and I don't know what that reason is. They just, every video I post, man, they just don't allow the monetization, and I have to ask for permission. I thank y'all for tuning in, man. I think that's all I got. Does Tim made his own time up? Yes, I did. I didn't make my own time up. Those are times that I heard Michael say. And so I just like incorporate everything. Those are the times I heard him say. Now get off my screen. Does anybody have anything other than Taryn, who's been hanging out with Robinson for far too long? Does anyone have anything for me? Could you contact someone and ask them to review your channel? You talk about that YouTube? I don't know. I just noticed it like one day I went live in a truck, and it said it wasn't suitable for advertisement. And then after that, every video that I post, it had that little yellow dollar sign on it, and I have to click on it and say review it. And I talked to my homeboy, him and his wife got like a huge YouTube channel. They like full-time social media influencers. And he even looked at here like, man, I don't see nothing wrong with your thumbnail. I don't see nothing wrong with your content, You're like, I don't know why they doing that to you. And I was like, me neither. I know not either. I know not either. I wish I did, but I do not. I wish I did, but I do not. Put that right there. Put that right there. Put that right there. Right there. Right there. Okay. I don't see anything. The day in the truck. Yeah. That day in the truck. You know what I'm talking about. Just see how you in your truck right now? I was in my truck. See how you in your truck right now? I was in my truck. Miss Michelle Tucker. Michelle Tucker, you one bad mother. Watch your mouth. I'm just talking about Michelle. Michelle. You welcome, Seawalk. Hey, man. If there's nothing else, all hearts and minds are clear. All hearts and minds are clear. If all hearts and minds are clear, we will adjourn for the evening. We will adjourn for the evening. Do you know if you mentioned this, but is the daily draw now bearish? I think because we took out the high and we need now to attack the daily sell side? Or do we need to at least get a wick CE of the 810 candle? What do you think, Iraq? What do you think? What do you think, Iraq? What do you think? What do you think, Iraq? What do you think? What do you think, Iraq? What do you think? It has done what it needs to do. It has taken out the buy side for the daily candle now. We took out this high, closed above it with displacement above. All right. So now we have opened up, pulled back, went up, and taken out the buy side. Now that the daily candle has done what it needs to do, now we fall back and submit to what does it want to continue to do? Will it continue to go up, or will it submit to the weekly bias of being bearish? Right. And if we're buried, the weekly bias is bearish, right? So now we've come up, right? We've come up, giving us a premium. Giving us a premium. We're up in a premium now. The weekly bias is bearish. Now the daily has done its duty of taking out the buy side. What do we do once we reach a destination? We wait to see what price wants to do, right? We wait to see what price wants to do. We've reached the daily destination. So now we're waiting to see if price will respect that hourly fair value gap that we talked about on the live that you was not on. that hourly fair value gap, and then start to proceed down. Again, it's typical. I ain't gonna say typical. It's a higher percentage of the times when we make the weekly high on a Tuesday if the week is bearish. It's also able to make the weekly high on a Wednesday, but it's high is the higher percentage of the time it happens on a Tuesday, right? Barring that it's no high resistance, right? On the weekly upside, we have the weekly consequent encroachment of this wick here, right? That's the pretty much the last weekly PD array that I'm watching that I don't want to get above. I don't want like a closure above this to keep the bearish thesis intact for the weekly. Yes. So again, when we take out buy side or sell side, right? We look to see how we closed in relationships to that high or low. And then if we get displacement above, the next day we're looking to take out that high. If we don't get displacement above, the next day we're looking to take out that low, right? So we got displacement above here. So now this day opens, we're looking to take out that high, right? We opened up, popped down a little bit, took out the high. Now that we've taken out the high, now we're defaulting back to what does the weekly want? The weekly, we're anticipating taking out this low. So to take out this low, we want to open, go up to a premium to get a reason to sell and come down and attack that low. Hopefully I didn't confuse anybody. Hopefully that made sense, E-Rock. Ain't nothing wrong with not being sure. Ain't nothing wrong with asking a question, unless it's a stupid question. Because there is a such thing as stupid questions. I don't care what nobody say. Oh yeah, I keep forgetting about the weekly profile. Yes. We always want to remember our higher time frame thesis, and we always want to have a point where our thesis is broken. Right? We always want to have a point where our thesis is broken. Right? Because remember today, anybody that was on the live today, remember when I was like, hey, the 1 minute has shifted bullish. The 5 minute, the 15 minute, and the hourly are still bearish. Okay, the 5 minute and the 15 minute have shifted bullish. The hourly is still bearish. Right? And then somebody say, hey, why was that 1 minute fair value gap not a short? The 1 minute had shifted. The 1 minute was shifted bullish first. So when the 1 minute shift bullish, you don't be trying to short based off of a 1 minute fair value gap, right? You shouldn't be trying to, unless you get to like a 15 minute PD array where you should be going short. If the 1 minute bullish, the 1 minute trying to get the 5 minute and the 15 minute and the hourly back to a premium, you know what I'm saying? If they bearish, because they're trying to get them back to a premium so the higher time frames can sell. So it's like you always want to know the narrative between. That's why I keep multiple charts open so I can see, you know what I'm saying, what's going on. Oh, this is bullish, this still bearish. Okay, so I don't get lost in the sauce. Sometimes I jump in and, you know, get my head bust in, you know what I'm saying, not remembering what's going on the higher time frame, getting too zoomed in. What, Taryn? Why'd you just type my name? What? Talk some Tim. You're welcome, E-Rock. Don't y'all hate when people text you and they just text your name? They just text your name. I get texts like that all the time. My phone go off, I pick it up, I'm like, and it just be like, Tim. Like, I know my name. Why did you just text me my name? Why did you just text me my name? All right, y'all. Y'all be easy. Enjoy y'all the rest of y'all Monday. Enjoy the rest of y'all yes, today's Monday. Enjoy the rest of y'all Monday. Man, we took out that boss out already. Took out that boss out already. Already got really close to that weekly wick. Still respecting that fair value gap. Hopefully y'all didn't hear that. If you did, excuse me. If you did, excuse me. If you're having flatulation problems. If you're having flatulation problems. I think that's all I'm gonna mark. I ain't gonna mark nothing else until tomorrow. Got a 15-minute, got an hourly with a 15-minute inside there. Do I want to leave that 15-minute there? I'll leave it there. Then you see how I broke this one down. A lot of times I'll do this right here. For anybody who don't know, you see how I got a 15-minute and a 5-minute SIBI right here. But if I go back up to the hourly, it's just an hourly SIBI. This weekly, that's the big gray area right there that we in. But it's just an hourly right here. I got one big hourly, but inside that hourly, right? I'm going down to 5-minute. Inside that hourly, there's a 15-minute and a 5-minute. Because if I go to the 15-minute, you see how it's like an hourly and a 15-minute together right there. But if I go down to the 5-minute, I didn't want to have like that hourly still showing because it's like I'm gonna go see how like it's doubling, like it's dark red. Then it would be like dark red, light red in the middle. I didn't like that. Just like I was like, do I want to leave this down here? And I was like, I'll leave it. But sometime I'll do that to let me know, you know what I'm saying? Something like that. Just like that. Okay, so 5-minute inside down. Getting a nice little rejection off of there. See if we come down. We come down and break this low right there. Might start pulling back. This 5-minute. Come down and break that low right there. Might start pulling back a little bit. Just in case I don't make it home tonight. 15. Yes, that's a 15-minute low also. Yeah, 15-minute low also. That's a 5-minute break right there. For the 15-minute, it'll be stronger there for me on the 15-minute, but that's also a 15-minute break right there. But again, like this one would be stronger for me because it'll be below this 15-minute BISI. That'll be a stronger break on the 15-minute, but that is a break on the 5-minute. And the 5-minute is, a decent level to have a break in market structure on, especially with like heavy displacement like that. Yep. Get off my screen. Get off my screen. With that, we for the call it, man. I appreciate y'all for hanging out with me. Enjoy the rest of y'all evening. Big spot of gold, man.